Good morning from sunny Dubai. It's now October in Dubai and the weather is really quite nice. Much better than the sun and the heat and the humidity of the summer. It's getting quite cool now, although it's still a little hot. It's about 27 degrees and it's 9 o'clock. Anyway, I like to go for a walk in the mornings, and I thought on this walk I would talk a little bit about doing a cash flow forecast and the steps involved, and make it, kind of informal rather than sitting behind a desk and trying to be very official and professional. So just to go through some of the things in my head and what I do when I prepare a cash flow forecast for companies I work with. And it's an important exercise, especially for small to medium-sized business owners like yourself. Well, it's an important exercise for every business owner, really, because knowing where you are with your cash and being able to have an idea of what I'd like to call stress points, cash stress points, are going to be, is vital for you in order to plan your operations, and it gives you that kind of sense of security and a safety net. So you get that feeling of security, really, that you know what your cash position is going to be based on the operations of your business. So the first thing I think you need to think about is the time period that you take, or when you do your cash flow forecast. So you're going to do it fortnightly, every 2 weeks, or you're going to do it every month, or you're going to do it every quarter or every half year. You're going to forecast at those particular times. My opinion, I think, is depends how old and mature your business is, and how well you know your numbers. I think if you're a smaller business, kind of just starting out, then I would do it far more frequently. Not weekly, because I think weekly changes too quick, but I would start off doing a forecast at least every month, so you know where you are. But then as you get more familiar with your numbers, then I would kind of do it every quarter. But I think to start with, a good rule of thumb is if you do a forecast, let's say at the end of every particular month, at the end of any particular month, what I would do is I would review that forecast at the 2-week level mark, the fortnightly mark, and then I would redo the forecast again at the end of the month for the coming period. And what time frame would I work out to? Well, again, I think what I would do is, if I'm a newer business, then I would do it based on a 3-month profile, a 3-month outlook. So if I start my forecast, let's say at the end of December, then I would do it for that a period of time that will cover the first 3 months, so January, February and March. And then what I would do in January is, when I get to the second week of January, I would review that forecast again, and then just to make sure that things, the parameters that I used, still make sense. And then what I would do is at the end of January, I'd redo the forecast again for February, March and April, and I would continue that cycle until I got to understand my numbers far more, and I get to know a bit more comfortable, be a bit more comfortable with doing the process of forecasting, and what data I'm using in order to provide that forecast. So I think that's the stage in the process I would go through in order to provide the forecasts for my business if I was doing it, and that's what I would advise any small to medium-sized business owner to start with. Now, if your business is a bit more established and you get to know the numbers, then you don't have to do it as frequently. I think a review every month would be fine, but then you could widen the period of forecast that you're looking at. So rather than just having a 3-month outlook, you could go for a 6-month, or what we used to do with more established companies is do a forecast to the end of the financial year. So if we were in March and we were doing a quarterly cash forecast, what we'd end up doing is we do that quarterly cash forecast from April to December, because December was the end of our financial year, and then we would review that forecast every quarter. But that's a more established business. That's a business that is more predictable, shall we say, and you get to understand the numbers and you feel more comfortable with the numbers that you're using. So yeah, I think we're coming into I live in Dubai, and I have a great place to walk every morning when the weather is a lot nicer, and we have I don't know whether you'd be interested, but we have just a nice little park area that I go through, and you can see that Dubai isn't all sand dunes and concrete buildings, and fortunately this little park, or this nice park, is about a couple of minutes from where I live. So I think that's how I would start my thought processes when it comes down to preparing a cash flow forecast for the period outlook that I would use, and yeah, and how I would go about reviewing it and managing that time frame. Anyway, I hope that's helped. It'll be the first in a couple of videos that I plan to put out regarding, maybe I'll do another one on this walk, who knows. Rather than have a long video, I'll break it down into sections so it makes it easier and it's a lot less boring for you. So that's it. See you in the next video when we'll look at how we manage the collections data and how we put that together into the cash flow forecast.